I've been studying how millionaires actually make money in 2026, and there are only 15 legitimate pathways that consistently work. Most millionaires build wealth through the stock market, real estate, or business ownership. But here's what shocked me. Most people waste years chasing fake methods that sound profitable but never scale. I'm breaking down which paths are real and why picking the wrong one costs you a decade. Here's the framework to choose your optimal wealth building path. First, audit your current resources, time, capital, and skills. Second, match those resources to the path that offers the highest probability of success given your constraints. Third, commit to one path for at least 5 years before considering alternatives. Business ownership is path number 1. About 79% of millionaires are self-made, meaning they built wealth through earning, saving, and investing rather than inheritance. The execution mistake I see constantly. People start businesses in saturated markets instead of boring, profitable niches where competition is thin and margins are real. Picture this. Instead of launching another meal delivery app competing with established giants, imagine someone who starts a specialized cleaning service for medical facilities. The barriers to entry are lower, the customer base is stable, and once you build trust with healthcare administrators, contracts tend to be long-term and profitable. The difference? One market is oversaturated with venture-backed competition burning cash to acquire customers. The other is boring, essential, and consistently profitable. Actionable steps for business ownership. Start by identifying 3 service-based businesses in your area with waiting lists or poor customer service. Research the profit margins, startup costs, and time to profitability for each. Choose the one requiring the least capital and offering the fastest path to positive cash flow. Validate demand by pre-selling services to 5 potential customers before investing significant money. Real estate comes second, and the wealth-building mechanism is straightforward. Rental income plus long-term appreciation. But here's where most people sabotage themselves. They chase appreciation over cash flow. They buy the sexy property in the hot market instead of the cash-flowing duplex that pays for itself month 1. Think about the difference between buying a trendy condo in a gentrifying neighborhood, hoping it doubles in value, versus purchasing a modest duplex in a stable working-class area where the rent from one unit covers the entire mortgage. The duplex owner sleeps well, knowing their property pays for itself every month, while the condo speculator sweats over market fluctuations and negative cash flow. One strategy builds wealth through time and compounding, the other gambles on timing the market perfectly. Real estate action plan. Calculate your maximum down payment capacity. Research rental markets within 30 minutes of your location using rental listing sites to determine average rents. Apply the 1% rule. Monthly rent should equal at least 1% of purchase price. Identify 3 properties meeting this criteria, get pre-approved for financing, and make offers on properties that cash flow from day 1. Stock market investing is path 3, and honestly, it's often the simplest entry point because it requires no special skills and minimal time commitment. The self-sabotage pattern? Day trading instead of boring index funds. People want action. The market rewards patience. Consider the psychology. You could spend hours each day watching charts, trying to time entries and exits, competing against algorithms and professional traders with superior information and faster execution. Or you could set up automatic monthly investments into diversified index funds and literally ignore your account for years. The day trader feels busy and important, while usually losing money to fees and poor timing. The index fund investor gets rich slowly and reliably by capturing the overall growth of the economy. Stock market implementation. Open a brokerage account with automatic investment features. Set up monthly transfers of at least 20% of your income into low-cost index funds. Choose 3 funds maximum: total stock market, international stocks, and bonds. Automate everything so you never have to make buying decisions. Review your portfolio once per year, not once per day. High income skills round out the traditional 4: consulting, sales, specialized technical abilities. The archetype: doctors, lawyers, executives earning $200,000 plus but living on $100,000. Income compression is the real skill. High-income skills roadmap. Identify the highest paid skill in your current industry. Invest 10 hours per week developing that skill through courses, certifications, or mentorship. Track your learning with measurable milestones. Once competent, negotiate a raise or find a higher paying position leveraging your new capability. Bank the income difference instead of lifestyle inflation. Now here's what's shifted in 2026. AI-leveraged services are exploding because AI is reducing the cost of innovation faster than markets can adapt. Digital product creation has become accessible to anyone with an audience, and the creator economy is generating real wealth for people who understand how to build and monetize attention. Strategic consulting, helping businesses implement AI and automation, is printing money right now because most companies are still figuring out the execution. AI and digital opportunities action steps. Choose one AI tool and become expert-level proficient. Create content teaching others how to use it effectively. Build an audience around this expertise through consistent posting on one platform. Monetize through consulting, courses, or done-for-you services once you reach 1,000 engaged followers. The pattern across all 13 paths? Successful millionaires pick one path, master the execution details most people skip, and compound over time. They don't chase flashiness. Here's your decision framework. If you have under $10,000 and limited time, start with high-income skills or AI-leveraged services. If you have $25,000 plus and want passive income, choose real estate or stock market investing. If you have business experience and moderate capital, pursue business ownership. If you're in tech or finance, focus on equity-based compensation strategies. Out of those 7 paths I just covered, business ownership, real estate, stock market investing, high income skills, and the 3 AI leveraged opportunities, which one feels most realistic for your situation right now? Comment your answer below. Let me dive into the 6 remaining methods that most people completely overlook. Investment banking represents the 8th path, and here's what people miss. Banks pump out multi-millionaires like factories. The wealth mechanism isn't the salary. First-year analyst compensation at elite boutiques now reaches $170,000 to $190,000, with top performers potentially earning $250,000 plus. But the real money comes from equity participation and deal flow over decades. Tech equity follows as path 9, where employees at successful companies accumulate wealth through stock options and restricted stock units. The pattern here: join early-stage companies with upside potential or secure senior roles at established tech giants where equity packages can reach 7 figures annually. Franchise systems create path 10, buying proven business models with established customer acquisitions and operational frameworks. The execution advantage: you're purchasing a tested system rather than building from scratch, reducing the failure rate that kills most new businesses. Licensing deals represent path 11, where you create or acquire intellectual property and collect royalties on usage. Think patents, software licenses, or content rights that generate passive income streams for years. Acquisition strategies form path 12, systematically buying undervalued businesses, improving operations, and either holding for cash flow or reselling at higher multiples. Private credit is reshaping wealthy portfolios right now, with private funds rapidly expanding to fill gaps left by traditional bank lending. Alternative investments like private credit, commodities, and collectibles occupy the 13th and final path. Strategic partnerships and joint ventures fit within this category, profit-sharing arrangements, and collaborative business structures that generate wealth through shared resources and expertise. But here's the crucial mistake most people make. They chase the flashiest path instead of matching the method to their existing skills and resources. No one gets rich off income. Literally no one. Real wealth comes from capital appreciation, stock options, warrants, RSUs, carried interest. Pick the path that aligns with what you already know how to do, then compound it for a decade. Your final action step: take this assessment right now. Write down your current annual income, available capital for investment, hours per week you can dedicate to wealth building, and your strongest existing skill. Match these 4 factors to the path offering the highest success probability. Commit to that single path for the next 12 months before evaluating alternatives. Most people fail because they switch strategies every 6 months instead of mastering one approach. Picture someone who chose the real estate path 5 years ago. They started with a modest duplex purchase in a stable neighborhood. Nothing fancy, just solid cash flow. Year 1, they learned property management basics while the rental income covered the mortgage. Year 2, they saved the cash flow and bought a second property. Year 3, they refinanced the first property to pull out equity for a third purchase. By year 4, they owned 4 properties generating positive cash flow. Year 5, their portfolio was worth over $1 million, generating enough passive income to replace their day job. The key: they picked one path, ignored the temptation to chase crypto or day trading, and systematically executed the same strategy over and over. Boring? Absolutely. Effective? The numbers speak for themselves. That's the difference between the people who talk about getting rich and the people who actually do it. And subscribe for more millionaire breakdowns and check out this next video. It's about picking your specific path.